Hello everybody and welcome to this next session where we're going to be looking at the next 5 years of payments. It's really going to be drawing on many of the themes that we've been talking about over the course of today. And indeed, 5 years feels like a very long time compared to what's happened in just the last year. I'm going to be joined in this session with some colleagues who I will introduce now, and I will allow them to say a few words about their role. Let me first bring on Bensi Aviv from Amdocs.
Hi, Phil.
Hi there, Bensi. Nice to see you. I was listening to your session just now as well. It's all very interesting topics. Perhaps you could give us a 30-second or 1 minute view of what's the future going to look like. Is 5 years going to be totally different from where we are now?
Well, that's a very tough question to answer. So I'll try to make some sort of a prediction here. I believe that if we learn something from COVID-19 is that we can't really predict what will happen next. So the intention is to create a capability to adjust better, adjust faster to anything that can come next. So I would say our future actually depends on our capability to adjust and to be agile enough to deal with whatever comes next.
Excellent. I'm going to bring in my next guest, Armin Agen. Armin, welcome to you this afternoon. How do you see the future? Again, same question for you. In 5 years' time, is it going to be absolutely different, or will it be recognizable from what we see today?
I think that what we have seen in the previous discussions and during this pandemic is an acceleration of the adoption of some of the changes that were being in the process by either the merchants, the payment networks, the banks, and that acceleration means that a lot of the technologies and the partnerships and the APIs that were brought together got pushed to the market a little bit quicker. I think before we see the next wave of innovation, it's going to take a little bit more time, and there's some intricacies behind it. But I really believe that biometrics, in one way, is something that's going to change in the next 5 years, and blockchain, because I heard earlier about cash. Today, we still don't have an alternative to that cash, and as long as we don't see it, there's still going to be there, and I think blockchain has a role to play there.
Excellent. I'm going to bring in my next guest as well, Justin Ho from Amdocs as well. What's your take on this? What will it all look like in the near term?
So Phil, I agree with the previous panelists, especially on blockchain. I see a big future for blockchain, certainly in emerging markets as a new way to pay. But my take on where payments is going to go, probably 5 years plus, is I think payments will disappear. Payments as a concept will disappear completely. If I was to look at a trend, I think payments will go the same direction as Tesla is with self-driving cars, such that I won't ever have to think about my payments at all. The right payment method will be chosen for me automatically. The way the merchant wants to be paid and the way the consumer wants to be paid will be worked out for me automatically on a win-win basis for the merchant and for the consumer. I shouldn't have to think about what payment method I need to use. It will be made for me in a way that's most beneficial for my objectives.
That's really interesting. It's like sort of the ultimate of frictionless payment. Let me bring in Brandon Trollip from MasterCard. Is that your view as well? Are we going to see less and less direct involvement and more automation going on in the back?
On Wi-Fi, but I agree and I sort of disagree in a number of points as well. I think I don't necessarily think that choice will be kind of made for us when we can make payments online or anywhere in the future. I think it'll be down to choice in the consumer as well. I think it's important that merchants and companies offer choice, but it's going to be down to the consumer in terms of kind of how we do that. Yes, we can already kind of make payments using voice. I do so with my Alexa device on a regular basis. I think the things that Amazon are kind of doing with just facial recognition is outstanding. So there will be choice, but I don't necessarily kind of think that companies will kind of force choice down our throat. It's going to be up to the consumer as to whether or not they choose to shop in a certain location and pay in a certain way.
And my last guest on this session, Dean Schwartz from IDEMIA. What's your take? I'm sorry, you're last into the fray.
No, thanks, Paul. So I think a lot of key topics and trends that sort of I've identified and we've identified is very similar to what's already been touched on. You know, if we really have to summarize it, we're looking at where things are going, and it's about seamless payments, behavioral payments, the no-click payments, but it will be about choice. It will be about choice through different channels. We then look at the IoT payments and how integrated payments, everything around us is becoming sort of has access and has connectivity, and payments are becoming embedded in more and more capabilities and technologies. And then I have to raise the point as well around blockchain or distributed ledgers and even CBDC, the central bank digital currencies that are currently under pilot with a number of countries. And that's going to open up a whole new domain of new opportunities for the private entities and private organizations as well as government. So do believe that regulations and governance around a lot of this will also dictate and drive where things will go. But it's all about consumer choice and consumer convenience. That's the big driver.
That's an interesting point, because I know a lot of the discussion earlier in the day has been, it's very much around the technology that sits behind a lot of payments. But at the end of the day, these are consumers making a choice about how they pay for things. Is there an issue here around financial exclusion and inclusion, that argument? So that if you haven't got a phone, if you haven't got a mobile, are you being excluded from some of these ways of engaging in buying things? Or is this actually a red herring? That ultimately, it's something that is open to everybody?
If I can raise it, I think one of the key things that we look at is mobile penetration.
I really hope my audio.
Mobile penetration is much greater than the banked today. Yeah. So there's still a large unbanked society that is currently needing to be serviced. And financial institutions themselves are looking for solutions through self-servicing kiosks, looking at various ways where connectivity may not be available or connectivity may not be accessible. You look at technology today in terms of inclusion. Just a few years ago, M-Pesa was a great use case in terms of being able to provide mobile payments to an unbanked society. In mature markets, we have less of a challenge, but in terms of the more emerging markets, mobile is still the key catalyst in terms of giving accessibility, and smartphones today are more affordable than they've ever been.
If I may add another point on top of that, because we started talking about the unbanked, but I think there's a problem also with the banked population. The more you use payment processing, the more you are exposed, right? Because if you look at the typical payment history of an individual for 1 month, you can figure out their political preferences. You can figure out if they're having a mental checkup or mental treatment once a month. There's a lot of information that is embedded into our payment history, a lot of information. We tend to ignore that because we focus on the social media, but look at it, look at yourself as an individual, look at your 1 month worth of payments. There's a lot of information embedded into that. So I would say that while we're focusing on the unbanked and how do we help them get access to the network and get access to the wallets, the payment solutions of the world, we also need to pay attention to the fact that we are exposing a lot of information into this. This is, by the way, my guess, and I can't prove that this is one of the main reasons why Google and Facebook and Amazon are trying to get into that, because it gives them access to very valuable information. If you look at it from an advertising perspective, the holy grail of advertisement is actually your financial information. It's the only piece of the puzzle that they don't have access to officially today. They know who you are, they know your habits, they know what you like, but they don't really know where do you tend to spend your money. The moment that they get access to your payment history, it puts us in a completely different era, right? You become more exposed than ever before. So I say let's also pay attention to the banked population, because the more you use wallet solutions, payment solutions, the more things become digital, the more exposed you are. And therefore, I look at regulation as the means to control that, but also while we keep the frequentless capabilities, we also need to pay attention to what is actually done with our data, what is actually done with this payment information of mine when I actually make a transaction online. So there are two
think these
aspects.
Yeah,
Sorry.
totally agree, Benji. I think that's the scary part about my prediction. When we have predictive payments, if computers are going to be starting to make those decisions and choices for us, that means that they know that this is what we do. This is how we like to pay. It's still more information. So I'm a bit on the Elon Musk camp here that we should be really frightened of AI and where it might take us. So my prediction is not necessarily one that I like, but it is a scary prospect. And to the earlier point about the emerging markets and financial inclusion, I think we must remember that all of these mobile payments really started in the emerging markets. They started with M-Pesa. They started with GCash in the Philippines. So that those markets are really have been and are already very tech savvy. So I don't see them being excluded. Whether it becomes a two-tier market, that's another conversation.
That's interesting. It raises a couple of points, really, I suppose. Is there an issue around more security and the privacy aspect of this? Because I guess the more we're using mobile payments, I suppose there's two things. One is company will know more what I do, but secondly, is there a need for an increased awareness of security and that side of things with so much becoming more digital?
I definitely think so.
I'd like to bring some.
Sorry. I don't think we're doing enough in that domain, if I may. I definitely think so. I think that it's going to get. We spoke about what will happen in the next 5 years. I think obviously there would be less and less cash and more digital transactions, and there's a price to pay for convenience, right? There's a famous statement saying, if you're not paying for the product, you are the product. So when it comes to this sort of convenient-based transactions or capabilities that you're given, you need to be aware of the fact that there's a price behind the scenes. You become a product. You become a source of data, basically. And data mining is the gold of the future, right? It's the oil of the next generation. So we need to pay attention to that. And when we build the solutions as software providers, as fintechs, we need to pay attention to that and make sure that the solution is built in a way that it can protect the information of the individuals using the platform. That's my view on it.
I'd like to add a little bit of more depth into this, in the sense where there's a couple of things that were touched upon earlier, and the divide between the mobile and the bank, I think it was a really good one, because I don't think that the lack of a mobile is going to be an issue in terms of accessing those new payment schemes, because the human is full of ingenuity and it's full of creativity in finding solutions. And I think the penetration, as Dean said earlier, the penetration of mobile is higher than the one of banks. But to go to the topic of the data and the collection of the payment data, I think there's something that we need to be very careful about. The banks themselves, when you use your card for payment, they have very limited visibility on what you're doing. They know how much you spend, they know where you spend it, but they don't have the details of what you're buying. The merchant has a lot more information about that. And there's a divide on who is collecting which data and where, and this disparity that is happening. So what you are seeing now with the new technologies that are coming into play, we're going back to the old bartering of data. Basically, 3D Secure version 2 is not enough to have the frictionless payment, but if you give me some more information, I'll give you the frictionless. So there's this exchange of information. And then when you look at this side of the data and how it is spread between different players in the industry, blockchain is a great solution for that, because in a way it allows the self-sovereign identity models where you give back that data to the consumer or the user, and they have transparency and visibility on how it's being used, by whom and where. And if you push that model a little bit further, then the person could find a way to monetize the data that is collecting about them. And And regardless of the payment, regardless of the bank, if I only pay cash and I go to the same merchant and I have my loyalty card with that merchant, they know a lot more about me than my bank will ever do.
Yeah, that's interesting. Brandon, I know you had some trouble getting on the system earlier. What's your view on this? What do you think?
No, I think I have to agree. I'd be foolish not to. I think everything that we do kind of at MasterCard as well is based on two fundamental principles. It's one is user experience, and the other one is the security of the consumer's information as well. And we just look at that in terms of network tokenization. And I know that I'm speaking very much from a cards-based world, but guest checkout is still an enormous kind of factor on how we pay for things kind of online, but there's an increasing number of us who can store our credentials online in card on file or anything else as well. And for that information, because it's out there in the internet, it needs to be secure. The data needs to be far more secure, and companies have to kind of take that a lot more seriously as well. We just look at the number of data breaches that we've had in the last kind of few years. And so for us, I think at the last count, we have something like 50-something different products, which are all based on data security. But I do believe that data belongs to, as was kind of said previously, to the individual. And if they have the ability to monetize that, then we're all for that as well. So I think the way in which we're moving is certainly putting data in the hands of the consumer, because that's who it belongs to. And again, the comments made about the issue is the banks not knowing what you're buying. They know how much you're spending. And that under open banking will become a lot more, I suppose, kind of prevalent in terms of availability of information with applicable account information, service providers, and payment initiators. It's going to be huge. And data is as you say, if you're not buying something, you are the product.
Can I just pick up on something you said there as well, in relation to who owns my data as a consumer? I know ultimately I own my data. It doesn't always feel that way somehow. When if I'm up and deal with some of the big online platforms, it feels like it's not it doesn't always feel like maybe a fair exchange. It feels like somehow I'm obliged to share data in order to participate in buying things or participate in that payment platform. Is that a fair view, or is that changing?
If I may, I think that we need to draw the line in between data that is collected for the purpose of improving my user experience, and data that is actually sold elsewhere. Even with the GDPR requirements here in Europe, whenever you log into a website, they give you this consent page, right? That you go and you see tens of different companies that you need to give consent to, and you finally figure out that they don't really use your data only for the purpose of personalizing the experience. They actually sell this data elsewhere to someone else. And this is where I draw the line. I say, as long as the data is used to improve my user experience in the website that I selected to be in, it should be, it's fine, because it's a trade-off between the ease of use and the personalized experience. But the problem is that all of this data becomes, it's commodity. It's being sold elsewhere. It's been sold to tens of different websites that I will never visit, that I will never go to, that I will never try to buy anything from. And this is where I draw the line. And I think it's not that we can block it all together and say, don't use my data. I think that most of us will be willing to accept the trade-off in between sharing my data and the personalized experience. But you want to make sure that this data is used for the purpose that it was intended to, right? But you don't find out that data being sold to a third party and then to a fourth and a fifth. And this is where I draw the line. So,
and if I could add, to see how many people are reading through these terms and conditions, clicking the ones that are only functional whenever you go to a website. I personally
That's what I do. That's what I do.
But you have a choice, right? So you decide what you want to do. But there's this trade-off of convenience, data against convenience, and the one principle is trust. And something was mentioned earlier: if you don't pay for it, then you're the product. You look at the history of two advertising organizations like Google and Facebook. People trust Google a lot more, and I think it's not by chance. They spend a lot of time and money in terms of creating that trust and doing more transparency on how the data is used over there. And I think that's the effort that they're putting in in place in terms of gaining the confidence and the trust of the people. But yeah, trust is a difficult word.
It's a long time to win and quick to lose.
But Phil, to your point, I think there is a really high degree of data ownership asymmetry at the moment, and we generally have become the frogs in the warming water. We don't realize that we are boiling, and in certain domains that already exists. So whether it be in social media or so on. But so one of the more scary trends I've seen recently in terms of payments is banks who are analyzing your credit card statements and looking at how you spend money and approving or denying a loan, a home mortgage, based on their assessment of how you are spending your money. So not just on your ability to pay based on normal metrics of disposable income, but being able to really dig into your data and seeing, hey, this guy's going to the pub all the time. He's not that trustworthy if he's going to be drunk half the time. So it's scary times. I mean, I'm in the camp of Aman that the more this gets to an anonymized blockchain world, then the better it is going to be for everybody's individual freedom.
Mm-hmm, mm-hmm.
Although to have a counter to that, I think one of the key considerations in terms of anonymity is that you can't create necessarily the right governance structures around it, as where you can around things like GDPR and PSD2, specifically requesting consent from consumers. And this is one of the debates that's going on in many circles today, is what are those benefits around the anonymized use cases versus the amount of fraud and risk that happens in those same scenarios. So it's definitely tend to agree. It's the governance structures about protecting the consumer at the end of the day is what's driving a lot of these initiatives.
Yeah, fair point, Dean. And so maybe it's layering it that level of governance on top of a fundamental architecture where your privacy is the first principle.
Yep, absolutely.
Let's focus a little bit back towards sort of the front line of payments and of consumers as well. What do you think are going to be the biggest hurdles that, again, we're looking at, that we all hand in our crystal balls and think, what's the next 5 years? What are the biggest challenges and hurdles that will need to be overcome over the coming years in order to take payments forward, to make it more universal, make it more frictionless? Let me start with Bensi. What are the biggest challenges?
I would say, first of all, is the overwhelming amount of pay means. Right nowadays, people buy Ethereum, they buy Bitcoin, and they can't really use it to make an online acquisition. They have to convert it into dollars and then they can. The thing is that and it's growing. You see Google being active about it. You see Facebook trying with Libra and Calibra. So I would say that the next challenge would be the fact that there would be so many different pay means, so many different possibilities to pay, source of funds that it will create a nightmare for customers. Therefore, what Justin said before about me as a customer and the system chooses for me is something that from now on I'll start dreaming about. Because if I look at myself, I have credit cards, I have debit cards, I have PayPal, I have Libra, I have Ethereum, and I can't really choose what I'm going to use for any purpose. So I would say, in my mind, the challenge would be making a kind of a standardized, global type of an exchange, if you can call it that, an exchange platform that will help me manage my payments, manage my different payment sources, if you can call it that.
I can imagine it'd be a nightmare if every time I wanted to buy something at the corner store, it said, and which of the 50 currencies do you want to pay in today?
Exactly. What kind of currency do you want to use? What kind of...
That's never going to work.
Yes.
Yeah, Phil, if I can sort of add as well, I mean, the sort of consumer choice is the great one, but also we work a lot with merchants, and again, it's down to kind of scale. So we have experience in working in products that are MasterCard developed or card scheme developed or even developed by partners, and adoption is the key. because merchants themselves don't want to have the means of payments that are cluttering up their payment pages that attract simply kind of no consumers at all. And so we do find that the companies that we work with, we spend a lot of time talking to them about, well, I hate the phrase, but what's your USP? Why are consumers going to use this? And sort of from a scalability perspective, how are you going to get there? Because a lot of our experience is based on it can't be just as good as something else. It really has to be better. And we have, MasterCard, Visa had our own sort of scheme wallets essentially out in market, but those didn't really have the traction that I think anyone really expected or hoped. But under EMVCo, where of course chip and pin and contactless payments has thrived, you now have schemes, and this is a point made I think by Benzik sort of earlier. You need to have a global scheme, and sort of under EMVCo, we now have secure mode payments, or secure mode commerce rather, than the consumer-facing brand being Click to Pay, which is tokenized credential on file but for guest checkout. So you do need to have a global scheme in place. And again, there's been a lot of hype over the last few years on cryptocurrency. And when I first joined MasterCard, that was pretty much all anyone ever spoke about. And from consumers we've spoken with and surveys that we've seen, allegedly 40% of consumers say that they're going to be using cryptocurrencies sometime soon. I'd like to know, as the comment was made sort of earlier, where, because I don't know where I could use cryptocurrency today. But again, it's going to be down to regulation, because consumers need to feel safe and trust in the methods that they can obtain. And so I think, cryptocurrency, although it's here to stay, with undoubtedly, but in terms of the speed in which it's adopted, it needs proper consumer regulation.
As a consumer, it's not something that I look at and think, I must get some cryptocurrency in my wallet. When you only got to look at the headlines, and today it's gone down half the value, tomorrow it's going to be up again. I wouldn't know how much money I've got. That's absolutely not what I want as a consumer. I need to know, dollars are dollars, or pounds are pounds, or whatever.
Yeah, and on that point as well, a lot of we have as you would imagine, very strong relationships with banks globally, and from a consumer's perspective, back down to kind of trust. When we speak with customers, both issuers and consumers, people do trust their banks. And so from an authentication perspective, making an online transaction, be it on the web or on your mobile device or in-app, to authenticate using a mobile banking app, that delivers the trust. And from a user experience as well, biometrics for a mobile banking app, that provides not just a great user experience, but has that sort of same security that we've always been aiming for. And again, MasterCard and everything that these schemes do is about user experience, as well as coupling that up with their security.
I think you've touched on really good points there, and a couple of them really resonate with me. Like the EMVCo example, I think it's a great one, because it's showing the value of the partnership, and together coming out with a product, giving this increased adoption is a really good one, because then people have the choice to put the card that they want in it, and it's a unified platform. And on the security side as well, because at the end of the day, there was on the card schemes side, if a card is compromised, then the whole industry is compromised, regardless of the logo on the card. And getting together in order to secure that was a driver in terms of getting people to trust the cards for the payments that they are making, and it's going to be insured if they have a bad experience. And the banks, I think it's not by chance that they are trusted by the people. It's the whole regulation that they have to follow that actually created that environment. And in some places, people trust the bank even more than the government.
Yeah,
probably true. Dean, let me bring you in on this. What do you see are the big challenges ahead?
I think a lot of this has been sort of touched on, and the main thing for me and what we're seeing as well is definitely security and convenience. At the end of the day, when you look at this interoperability between all these channels, interoperability between all these payment options, and the governance structures of EMVCo, for instance, EMVCo 3DS 2.0, the EMVCo drivers around SRC or Click to Pay, mobile or both. You've got your merchant tokenization, you've got your network tokenization. These are all parameters that help drive the security and the interoperability within the ecosystem. I think what's happening, though, is if we look at a cards domain, it's very well structured, very well organized, and there's a lot of regulation drivers around it in terms of even self-regulation. Whereas a lot of the mobile payment domains, leveraging off new open banking channels, leveraging off new sort of initiatives that are whether it's UPI integrated technologies or other means, all of a sudden this becomes a whole new domain of both opportunity and risk. And I think the governance structures and interoperability of that is going to be a key factor in the success of how this all ties together. For instance, even cryptocurrencies, many of them are now leveraging off MasterCard, Visa, Discover, Amex's rails to be able to get acceptance at the merchants. So it is going to be an integrated ecosystem as opposed to an isolated ecosystem.
Which makes data security and privacy even more important.
That's right.
It comes down to the heart of it, doesn't it? I mean, on one of the sessions I was on this morning, looking at consumer uptake of mobile payments. The key thing, why do people use mobile payments? It's convenience and ease of use. It's easier than getting a separate card out of my wallet. If it's all in my phone, it's certainly easier than handling cash these days. What can we do to make that an even more frictionless experience for a consumer going forward? Are there things that, is it always just going to be tap my phone on a pad? Is it going to be always going to be snapping a QR code? What are the developments we're going to see coming along that will make it even easier for me to go anywhere in the world and buy the can of Coke, buy the newspaper, whatever it might be?
You probably have to look at what the definition of payment streams are, because if you look at it traditionally, you've got your point of sale where it is the tap. So with the tap of a physical card or it's a virtualized card on your mobile, those are various options. E-commerce, mobile commerce has really moved that into the digital domain with a lot of regulation, governance, and structures to support it. And acceptance has just been a huge catalyst with COVID. We then look at sort of recurring payments, your everyday Netflix, your Disney Plus, where it's the cards or your payment terms have been tokenized, and now it happens without you even having to have any sort of manual interventions. And then you have your IoT payments, which is all of a sudden now you've got all this data happening around you, all this information happening around you, and that information is now being used to be able to do, our printer goes and orders ink cartridges because the ink is low. The pay-as-you-use models and mobile operators have been around for a long time applying that. Now it's moving into a technical domain. So it really depends on the different streams. It's not that one is going to be the only driver. It's going to be a meshed environment of all these factors.
Anybody else to pick up on that? What's going to make this a seamless, frictionless?
I think that eventually, and it's the irony of the matter, because every organization nowadays that offers you a service wants to collect your data. And they all collect data in different ways, right? Even the small moms and pop shops today that are digital, they want to know what you bought today and what you're going to buy tomorrow. The thing is that the collection of the data, which is it has to happen, right? Eventually, and we spoke about the trade-off in between the data that I'm willing to offer in exchange to the convenience that will be given back to me. But I think that the challenge is the fact that every organization out there is trying to collect my data. And that creates part of the friction, because if I use an example, when I buy a movie ticket online, and I used that example in the previous session, but in a different context. But when I buy a movie ticket online, eventually I would be redirected to a payment page, and then I will be redirected back to the merchant page to complete the transaction. This is friction. This is unnecessary friction, to be honest. I don't really need to do that, but the fact that the bank still insists to process the payment because they know me better and they know my card and they know my history creates the friction, and I'm worried that this will actually become worse and worse and worse, because as I said, every company, we speak freely about data being the oil of the future, right? The gold of the future, basically. So mining data is important. Therefore, more and more companies will do it even more and more, and they will do it in different ways. I honestly believe that the friction is not caused by technology. It's actually caused by the fact that different organizations are trying to mine my data, and therefore, I will be redirected, I will move between pages, I will be sent to different pages to complete the transaction, because everybody wants to get their share of my data, basically, because that's the essence of the service that they're providing. As long as we won't solve that problem, as long as there will not be any kind of a standard, and to be honest, we can't, it will happen. That's my wish would be that, or my hope would be that at some point there would be kind of a standardized way of collecting my data, and therefore I can be paid. This also brings us to the point that once there's a standardized way of collecting my data, and companies can get access to it based on my confirmation, I can get paid for it. Whenever someone accesses my data, I can get paid for the fact that my data was accessed, even if it's a fraction of a cent. But still, it will ease up the friction. I believe that the friction, as I said, is not driven by technology. No more. It was in the past, but it's not the case anymore. It's actually driven by the fact that different organizations that are part of my payment process are trying to mine my data.
It's the business models.
Yes.
That's interesting.
I think it's also something different, sort of a different angle to this as well, though, is that when things become far too easy, government's going to tend to step in as well and make things a little bit more complicated again. And by that, well, regulation does that, sort of, I suppose. But you look at sort of the question, what makes things easier? You've got biometrics, you've got facial recognition, you've got behavioral biometrics, you've got all sorts of these different things. I think under EMV 3DS, there are something like 200 and something data points that are collected or can be collected to kind of make the decision-making process a lot easier from an issuing perspective. But when things get too easy, and you're subconsciously almost buying things, have you really kind of given consent to making that transaction in the first place? So having some form of intervention where you're consciously tapping on something, you've done the identification, the verification, but do you really want this? And I think, companies do also need to have a responsibility to ensure that people aren't buying things because it is super convenient. We do have a responsibility to ensure that we are being responsible and not just exploiting sort of consumers as well. So it's a different angle. We do need to make things super easy. We do need to make things super secure, but there's also a responsibility to ensure that people are spending what they really need to spend. Who makes that decision, though? Certainly not me, because it becomes who guards the gods.
That's the really interesting point. One of the slides I was talking about in a session this morning was around what are the barriers to further uptake of mobile payments, and not surprisingly, it was looking at consumers talking about trust and security, and the fact that there was a perception, and to a lesser extent a reality, of the feeling of being overcharged for things. The definition being I've been charged for something that I didn't think I was going to be charged for. Now, there may be sort of a genuine mistake, someone thinking they didn't subscribe to something when they did or whatever. But it's that same point of if I feel I've bought something that if it looks like I've bought something and I didn't really give that permission, it's a trust issue again in the whole payment system, I suppose. As a consumer, I don't want to feel that I'm buying things that I didn't want to buy, and it's exactly your point about needing to give a reasonably frictionless but explicit yes to something, as opposed to a system saying, "Well, you probably want to buy this, so I'll make it happen for you. I'll do the transaction." Yeah. There needs to be that sort of
consent. Consent needs to be traceable.
Yes, yeah. That's exactly right.
And I think there's a very subtle nuance between the intent and the consent, right? So when we were talking about IoT payments earlier, there's this whole question of how do we get a payment or the transaction initiated by a machine that is not human driven, and that brings the whole discussion from earlier around predictive payments. So basically at the beginning there's like a transition that happens where the system understands how you're using it and how you're consenting to it, but then at some point that intent consent becomes predictive and happens in the background without you knowing it, and then comes the question of people trusting people more than machines. Even though the machines make less errors than humans, we are less tolerant towards them. And what happens when there's something that's being ordered by my fridge, which I didn't really need, or it happened just before I went on holiday, or things like that. how do you deal with these situations? And
well, that's sort of the algorithm, isn't it? It's
that's right.
Worst case scenario, if my computer can tell I really like the look of that car in the advert, and all of a sudden it turns up on my drive, I'm $50,000 in debt. That's really not. That's going to dent my trust in the system somewhat.
Well, you'll enjoy the joyride.
I'll enjoy the argument with someone. Yes, that's probably true. I wanted to pick up on the topic that we looked at in the previous session just before this about the impact of COVID and the pandemic. What's your view on how COVID has and is changing the payment landscape? I mean, we all see changes around today. So there's far more contactless, there's less cash, certainly in Western countries. Is this going to continue? Are we going to see an ongoing change in the payments landscape, sort of driven by or accelerated by COVID?
So let me give you some actual real-time data on that. So in India, we handle the majority of top-ups for telco payments in agents. So cash being received to top up your prepaid account. Prior to COVID, that was still heavily swayed towards cash. And as COVID hit, it dropped off dramatically. I mean, for the simple reason that those agents were closed. Once India got through its first wave, it flipped back the other way. So we have this kind of, I think, romantic notion that everything will change because we went through COVID. But what the actual data shows is that the habits are really hard to change. And as soon as the stores opened again, people went back to physically handing over cash and getting their top up. Yeah. So that's just one data point I thought I would throw in there.
Is that a geographic thing? I certainly see. I'm sitting in the UK, which I don't know how representative we are, but my perception is there's been an uptick in contactless versus going somewhere and paying cash. I've got cash in my wallet. I've had it in there for a whole year. I've not, I haven't drawn the paper notes out because I haven't needed to, because it's become so much easier to pay contactless for stuff when I'm out and about.
Yeah, and I think in the developed world, it's definitely geographical, Phil, because in the developed world, we are really already accustomed to multiple payment methods.
Yeah.
Whereas in the emerging market, my de facto payment method was cash. The previous conversation was all about cash elimination. Don't get me wrong, that's going to happen. The speed and scale at which it happens, we see it directly in the data. It flipped really quickly back. So it's not a done deal in those sorts of markets.
Yeah, I mean, but from a cards perspective as well, in Europe, I think it's like 8 in 10, so 80% of MasterCard transactions now in the physical environment are contactless as opposed to chip and pin, and that's been a huge jump. And we also see that from, I think, digital adoption across Europe was around 80% before the pandemic, and after the pandemic, it was over 95%. And again, people can run surveys, and the vast majority, again, I hate quoting stats, but I do have them to hand. I think it's something like 7 in 10 consumers worldwide are saying that the shift to digital will stay as far as they're concerned, with over half of those saying that they plan to move away from cash completely. Now, I don't know how true that is, but that's what the survey says. I mean, I personally, like you, Phil, have not had cash in my pocket for a long time. Every now and then my daughter raids sort of a piggy bank in the house, but it's where you even spending your cash. Just use your your kid's Monzo card or whatever. So there's been a huge shift, and I think it'll stay as well. Part of
that is also the transaction level that you're allowed to do contactlessly has come down and gone up as well. So I can now spend a bigger sum, but I can spend 50p in the UK, which was never the case before. I'm afraid we're rapidly coming to the end of our time. Let me give everybody a last 30 seconds just to sum up where they think the future will be for payments. Let me start at the top of my list as usual. Bensi, 30-second roundup. What's the future hold?
As I said, I think we'll see a lot of investment into creating a seamless experience to customers. I think that we have a lot of challenges to be dealing with. We spoke about data, we spoke about technology, we didn't cover the international remittances. We covered it in the previous session. So the possibility to transfer money in between countries, which is extremely difficult nowadays, should be resolved. So the way I see the future is that this will become a real global economy, right? That people would be able to make these transfers and payments in between countries, while keeping in mind that we need to protect our data and we need to protect ourselves from fraud-based transactions. So I'm excited about it, to be honest. I think COVID-19, with all the difficulties and all the bad things, a lot of bad things, one of the small things that came out of it was
small upside.
Small. Yes. That it's the acceleration of the understanding that digital payments are this is the face of the future.
I think that's right. Armin, let me pull you in for the last overview from your perspective.
I think I kind of agree with a lot of things that were discussed during the session. I think that there is going to be a reduction in usage of cash. I don't think it's going to go away. None of any of the payment instances that we have ever disappeared, right? We still do bartering.
There'll be a long tail of cash.
But it's going to be significantly reduced in terms of its usage, and I see that happening every day. And the predictive side of the payment, to add another layer of convenience, and the self-sovereign identity, which is going to allow people to get control on their data and providing transparency on how the data is used, is going to be
excellent. Justin, your last views.
Yeah, so for me, very similar to Armin. For me, it's about being able to be in control. Blockchain, to me, is the architecture that does it. I think the next Gen Z is going to be totally comfortable with it. They are less tied to an institution. So we as institutions will need to adapt to that. And then predictive payments. Choice is exhausting, and let's simplify that.
I think there's another whole session there on predictive payments. Brandon, over to you for the last input.
Yeah. Look, I agree with everyone. Very easy from my side of things, but I think as well, we as an industry have an obligation to focus on financial inclusion. Look, there are still 1.7 billion adults out there who are not banked, and I think that's where we can need to focus on the future. Using mobile technologies, we can draw in almost 1 billion of those into the financial mainstream, and I think that's where the future should also be focused on. So not just about commerce, but bringing people into this as well to create a bigger, I suppose, a digital a digital class, if you like.
Yeah, I like that. That's interesting. And Dean, the very last words from you.
Thanks, Paul. So I think, again, to support everything that's been mentioned in this discussion, and it's all highly pertinent and prevalent, I think, to be honest, it comes down to security of the transactions, the consumer choice and consumer behavior driving the success factors, because technology is not the inhibitor. There's a lot of technology out there. It's the adoption and the interoperability of it that'll be the key success factors. And then again, back to privacy, the data security, consumer security, and then the intent and consent around that. That's what's going to make it a very interesting payments domain coming forward.
That's fantastic. Gentlemen, thank you all very much for a very interesting and wide-ranging discussion. I think we've touched on many things here that can be the subject of many more discussions if we only had the time. So I will hand back to our moderators to close up, and thank you all very much indeed.
Thank you, guys.
Thank you.
Thank you. Bye-bye now.